Welcome back to the deep dive. It feels like the news cycle just gets faster and faster, right?
It really does. And those financial reports, they can seem so dense, almost impenetrable sometimes.
Totally. So that's our mission here. Cut through all that noise, get past the jargon. We want to deliver clarity, transform that complex data into insights you can actually use so you feel informed without, getting bogged down.
Exactly. Making it digestible.
And today, we're diving into a really significant one. Apple's latest financial performance, specifically their June quarter results.
Yeah, we've been looking through a recent financial news report on this.
We have, and we're ready to unpack the key takeaways for you.
And this report is particularly interesting, I think. It's not just about the numbers, the dollars and cents.
Right.
It digs into the underlying trends. You start to see these strategic shifts happening inside one of the world's biggest companies.
It's the story behind the spreadsheet.
Precisely. So, by the end of this, you'll have the key insights, maybe some surprising facts that didn't make the headlines, and a much clearer sense of what it all means for you as someone just trying to stay informed.
Okay, let's jump right in then. The headline news, because the market reaction was, pretty positive, actually.
It was, against the grain almost.
Yeah, Apple shares moved up about 2% in extended trading. This was right after they reported numbers that beat Wall Street expectations.
Which wasn't necessarily a given, considering the headwind.
No, exactly. And you had Tim Cook, the CEO, talking about a June quarter revenue record. There was definitely some excitement there, especially with all the chatter about, market saturation and economic pressures.
Yeah, that record quote definitely caught people's attention.
Yeah.
And when you look at the overall figures in the report, they're genuinely impressive given the climate.
So what are we talking about, top line?
Total revenue hit $94 billion. That's nearly 10% up from the same quarter last year.
Wow, 10%.
And significantly ahead of what analysts were predicting. The consensus was lower.
And the bottom line, earnings?
Earnings per share came in at $1.57. Wall Street had penciled in something like $1.43.
So a solid beat on both fronts.
A very solid beat.
Yeah.
These aren't just, okay numbers. They show real strength, real resilience. It suggests that demand for what they offer is holding up remarkably well.
Okay, so strong overall picture. Let's unpack that a bit. The star performer, by all accounts in this report, was the iPhone, wasn't it?
Absolutely, the standout.
Which is interesting because you hear so many concerns, right? Like global economy, maybe the phone market is saturated, people aren't upgrading as fast.
All those narratives were out there.
But this report paints a different story. It says iPhone revenue soared to $44.6 billion.
Yeah, $44.6 billion. And analysts, they were expecting closer to $40.1 billion.
That's a huge beat, almost $4.5 billion more than expected.
It really is. And get this, it's the strongest growth for the iPhone in years. Over 13% year-over-year growth.
13%. For a product line that mature, that's incredible.
It really is. It shows that demand for the flagship product is, it's still incredibly robust.
So how? What does the report suggest drove that?
See, this is where it gets really interesting. The report hints at the why.
Okay.
It suggests demand, particularly in the U.S. and China, got a lift because consumers were sort of front-loading their purchases.
Front-loading, meaning?
Meaning they were buying iPhones now because they expected prices might go up later,
Yeah.
likely due to tariffs.
Okay, so buy it before the price hike hits, like stocking up.
Exactly.
Yeah.
It's this fascinating dynamic in consumer behavior, right? People acting strategically based on anticipated costs. And Apple benefited directly from that this quarter.
Shows the power of the brand, I guess. People wanted the phone enough to accelerate their purchase.
That's part of it, yeah. And maybe a belief that prices would rise.
Makes you wonder if that pulls sales forward from future quarters, but for June, it clearly worked. Okay, let's shift gears from hardware to the other big story for Apple, services.
Yes. The strategic pillar.
We've been hearing about this pivot for years, and this report, it seems to really underline that success. Services revenue hit an all-time high.
All-time high. $27.4 billion.
Wow.
Which, again, beat forecasts. Analysts were looking for around $26.8 billion. So another beat there.
It just shows how much that side of the business has grown.
It's incredibly significant for their long-term strategy. I mean, think about it. Services also grew 13% year over year.
Same as iPhone growth.
Exactly the same percentage growth. It just reaffirms this massive shift towards recurring digital revenue.
Yeah.
You sell hardware, it's kind of a one-off transaction until the next upgrade.
Right.
But services, the App Store, Apple Music, iCloud, TV plus Apple Pay. That's steady, predictable income, month after month, year after year.
And higher margins, presumably.
Generally, yes.
Yeah.
Much higher margins than hardware, less exposed to supply chain drama, tariffs, all of that. It provides a cushion. Wall Street loves that kind of predictable, high-margin revenue.
So it fundamentally changes the investment thesis around Apple.
I think it does. It really raises the question, doesn't it? What does this shift mean for the future of, well, all the big tech companies? Is it becoming less about the shiny box and more about the ecosystem, the services it enables?
Yeah, the ecosystem play, it feels like that's where the battleground is shifting.
Definitely feels that way.
But speaking of challenges, let's talk about the elephant in the room. Tariffs. That's been a cloud hanging over Apple for a while.
A significant one, yes. Impacting costs, supply chains.
So what did the report say about the actual cost impact this quarter?
Well, interestingly, the report notes that tariff-related costs were about $800 million.
Okay, $800 million. Still a huge number.
Oh, absolutely. But it was actually slightly below the $900 million that had been expected.
Huh. So less bad than feared on that front, at least.
A small silver lining, perhaps. But connect this back to the bigger picture. There was a lot of fear, right? The tariffs would really hammer Apple's growth.
They're sure. The report even mentions the stock was down 15% for the year before this report came out, partly because of those fears.
Exactly. But Cook's comments, these numbers, they suggest Apple's margins held up surprisingly well. Their resilience is pretty remarkable, even in this bumpy trade environment.
So they're managing it somehow, absorbing costs, passing some on, finding efficiencies.
It seems like a combination of factors. It just demonstrates how a company like Apple can adapt. They're not immune, nobody is, but they have levers to pull diversifying suppliers over the long term, maybe some pricing power, operational tweaks. It shows corporate agility.
Okay, so we've covered the strong overall numbers, the surprising iPhone surge, the massive services growth, and how they navigated the tariff situation. Let's distill it down. What does this all mean for you, the listener, trying to make sense of it all?
Well, I think the key takeaway is Apple's really exceptional financial resilience and growth this past quarter. It wasn't just luck.
Right.
It was driven by, first, those stronger than expected iPhone sales, helped by that interesting consumer behavior we talked about.
The front-loading effect.
Exactly. And second, critically, that record-breaking services revenue. That's the engine humming alongside the hardware.
So despite all the challenges of the economy, the tariffs, they still managed to significantly beat expectations.
They did, which tells you consumer demand for their core stuff is still strong, and their diversification into services is really paying off. It's a story of adaptation and, well, thriving in complexity. Understanding that gives you a better lens on not just Apple, but maybe the whole tech landscape.
It's a fascinating deep dive, for sure. We've hit on that strategic shift to services, the surprising iPhone strength, and how they're managing these big external challenges like tariffs. It paints a picture of real resilience.
Deeply ingrained resilience, and a diversified path forward.
So what's the final thought to leave people with, connecting this to the bigger picture?
Well, think about this strong performance, especially in services. What does it really tell us about the future of consumer tech? Is it increasingly about building that sticky ecosystem? Generating recurring revenue from subscriptions, from software, from payments, rather than just selling the hardware itself?
Is the hardware becoming just the key to unlock the services?
Maybe. It certainly feels like the ground is shifting, doesn't it?
Yeah.
Where the real long-term value is created. It suggests the playbook for tech giants might be fundamentally changing. Something to mull over.
Definitely something to think about. Understanding these details, that's how you cut through the noise. That's how you get truly well informed. So keep digging, keep asking questions,
Absolutely.
and we'll see you on the next deep dive.